Welcome to the weekly market wrap-up. I'm Hannah Bernard. Great week for U.S. stocks as all three indices edged up on Thursday, with the S&P 500 hitting another record high. Although data showed the U.S. economy contracted in the first quarter, mostly due to weather, market signs indicate activity has since rebounded. Let's check out the numbers. The Dow Jones Industrial Average continued its climb on Thursday, closing up 65.56 points to 16,698. The S&P 500 also continued its record-breaking trend, closing up 10.25 points to 1,920. And the NASDAQ also closed up for the week, climbing 22.87 points on Thursday to 4,247. Now let's turn to Canadian markets, which had a much different week. The Toronto Stock Exchange kept losing ground all week, closing down again on Thursday, losing 22.01 points to 14,588. The TSX Venture Exchange also turned in a poor performance, closing down 2.06 points Thursday to 981. Apple gained 2 new employees this week, and it wasn't through the average interview process that you would expect. No, the hire went a little bit more like Apple handing over a check for $2.6 billion cash, and in return acquired Dr. Dre and Jimmy Iovine as the newest members of Apple staff. Yes, from now on, Dr. Dre and Iovine will be making the commute to and from Silicon Valley, as the Beats by Dre empire has been purchased by Apple software. Tim Cook made a big move with this overall $3 billion deal, as there has been speculation that the computer giant has been losing its edge in the market. The induction of Iovine and Dre not only make Apple cool again, but will also facilitate success for Apple's recent iTunes radio endeavor, which has been a struggle for the company. How big of a purchase was this for Apple? Big. Cook told CAFTA that Apple has snapped up about 27 companies between fiscal year 2013 and now, but the only purchase that amounts to even coming close to the Beats by Dre deal was the purchase of Steve Jobs' Next computer in '97, which was for just north of $400 million. This move can only translate that big things are to come, and Apple is finally getting serious about the streaming music business. Let's turn now to our roundup of Canadian news. First up is bad news for the Canadian trade balance. Statistics Canada reports that exports declined 1.4% in March, while imports edged up 0.4%. Quite a flip from February, as we saw exports grow by 3.6%. With the March decline, Canada's trade surplus with the world has narrowed from $847 million in February to $79 million in March. Stats Can's labor force survey for April is also out. It shows employment decreased by 29,000, while the unemployment rate remained unchanged at 6.9%, as the number of people participating in the labor market edged down. Since August 2013, there has been little overall employment growth in Canada. Finally, Stats Can released March results for building permits issued by Canadian municipalities to contractors across the country. While most expected a spring increase, the downward trend continues, with building permits falling 3% in March to $6 billion. Now to winners and losers and our picks for the week. The winner for this week is Theralase Technologies Inc., ticker symbol TLT. Theralase shares shot up 64% on Thursday on news that its lead photodynamic compound, intended for the destruction of cancer cells, has demonstrated an ability to render animals immune to repeated exposures of the same cancer. Theralase is an Ontario, Canada-based company that trades on the Toronto Venture Exchange. The company has created a non-invasive system for cancer treatment based on its patented superpulsed laser technology. The loser for this week is Michael Kors Holding Limited, ticker symbol KORS. Michael Kors shares plunged 4.88% to 92.28 on Thursday, just a day after the affordable luxury accessory and handbag maker reported fourth quarter earnings per share jumped to 56% to 78 cents. Like shoppers with buyer's remorse, investors on Thursday were second-guessing the fashion house over its retail operating margins, which have fallen 22% due to high rent costs from store openings. Well, those were our winners and losers for this week, and now it's time to check in on the gains you could have locked in by following the weekly watch list from Robert James and Viral Stocks. All right, that's enough about this week. Now let's turn to BayStreet.ca's look at the week ahead and the snapshot of what analysts are forecasting for companies whose earning reports are coming out next week. Here are 3 U.S. stocks to watch. First up on Monday is Krispy Kreme Donuts Inc. with an EPS forecast of 23 cents from 20 cents in the prior year quarter. In mid-May, the donut giant opened its 600th store worldwide. Next up on Wednesday is FCEL Energy Inc. with an EPS forecast for a loss of 4 cents, identical to the prior year quarter. In mid-May, the Connecticut-based company announced a collaboration with POSCO Energy to support multinational customers expressing interest in fuel cell projects in the other partner's territory. Finally, on Thursday is Diamond Foods Inc. with an EPS forecast of 16 cents from 5 cents in the prior year quarter. Here are 3 Canadian stocks to watch next week. First up on Monday is Lone Star West Inc. with an EPS forecast for a gain of 3 cents from a loss of 3 cents in the prior year quarter. In May, the Alberta-based company announced a round of bought deal financing with several underwriters for gross proceeds of $20 million. Next up on Wednesday is Nordion Inc. with an EPS forecast of 26 cents from a loss of 3 cents in the prior year quarter. Finally, on Thursday is Saputo Inc. with an EPS forecast of 74 cents from 65 cents in the prior year quarter. And that wraps it up. Thanks again so much for joining us for another weekly market wrap-up. Before you head out for the weekend, make sure to subscribe to our YouTube channel and find us on Facebook and on Twitter. For Viral Network News and BayStreet.ca, I'm Hannah Bernard.